Hi, I'm Sharon Winsmith, a tax attorney, active investor, and your go-to resource for proven investment and tax planning strategies. In this video, I'm going to talk to you about what it means to be an accredited investor. I'll walk you through why it matters if you are or not an accredited investor, and I'll explain to you the definition of accredited investors and tell you who qualifies and who doesn't. To start with, if you haven't watched my video on the different investment hurdles, I highly encourage you to watch that in conjunction with this video. I'll link to it below, but that explains to you the different hurdles that you need to go through as far as building your net worth and the different types of investments you can make once you reach those hurdles. So after you watch this video, you should also follow up by watching the qualified purchaser video. I will also link to that below in the comments because that's the next hurdle that you want to think about meeting once you reach accredited investor status. So let's start with why it matters who is and who's not an accredited investor. So accredited investor is a defined term by the SEC. SEC is the Securities and Exchange Commission, and that is the regulatory agency that regulates securities, public companies. So before a company goes public, they have to do all kinds of filings with the SEC and comply with all kinds of requirements that the SEC sets out. Also, certain investment funds, so if you're investing in real estate syndications, venture capital funds, private equity funds, they have to think about SEC rules as well because they could potentially apply to them as they are going out and seeking investors to invest in their funds and whatever assets the fund is going to buy. So the SEC defines accredited investor, and I'm going to walk you through that definition in just a minute, but it's important because the SEC restricts what types of investments you can and can't make based on whether or not you qualify as an accredited investor. So for example, before you can invest in really quality real estate funds and syndications, you commonly need to be an accredited investor. So the SEC says that we're going to limit certain types of investments to those who have already achieved the status of accredited investor. The whole point of the rule, which I think is really ill-conceived and not fair, is that they think that people that have more money have more sophistication around investment knowledge and are less likely to do something that's going to get themselves in trouble and take on, unnecessary risks. So they're trying to limit who can make certain investments based on how much money you have at the end of the day. So let's talk about who qualifies as an accredited investor. So it's really a basic definition. It looks at income and net worth. And if you meet one of these two tests, you can qualify as an accredited investor. So the first test is that your annual income exceeds $200,000 a year. If you are a single person, if you are married or have a partner, you're required to have a combined income of over $300,000. So you have to have met those income thresholds for the past 2 years. And you also have to think that and have a reasonable expectation to continue making that income level. So if for some reason you just made a bunch of money in the past 2 years, but don't think that's going to continue, you would not qualify as an accredited investor. But as long as you're someone who meets these income thresholds, $200,000 if you're single, $300,000 if you're married, then you can qualify. Let's say that you don't meet those income levels. You can still qualify if you satisfy the net worth test. So here the net worth test is that if you have assets over $1 million, you can also qualify as an accredited investor regardless of what your annual income is or has been in the past. One thing I want to point out, this is very, very important, is that when you're looking at this net worth test, it does not include the value of your personal residence. So if you're someone who owns your home, you cannot include that in the definition and the amount of your total assets when trying to add up if you meet this $1 million hurdle. So if you've watched any of my other videos or listened to anything I said, you know that I personally do not think your personal residence is an asset. And if you don't agree with me and my logic on that, you should understand that the SEC does believe that. So the SEC says that your personal residence doesn't count here and should not be counted for purposes of your net worth. So watch out. If you go out and buy a home, you don't want to kick yourself out of accredited investor status. So let's just walk through a quick example so you can see how this net worth test works in practice. Let's say we have Mary, an individual. She's single. She's not married. And she has $500,000 of stocks and bonds. And she has a personal residence with $1.5 million of equity in that. So you might at first blush think, of course, Mary satisfies this definition. She has $2 million of assets. However, that is not true. You do not get to count her personal residence in that. And Mary is not an accredited investor because she only has $500,000 of assets and she would not meet that $1 million threshold. Mary could still qualify if she met these annual income tests, but for purposes of this example, I just want to illustrate to you how if you go out and buy a home, you may have accumulated, $2 million of assets, but if you go out and buy a home and spend a bunch of money on that, you might actually be kicking yourself out of accredited investor status. So it's important you understand that nuance to the definition and make sure that you do everything you can to satisfy and become an accredited investor. So the last thing on the definition I want to mention is that as I mentioned at the start, you are restricted in the types of investments you can make, whether you are or not an accredited investor. A lot of really great investments even go higher and require you to be the next level, which is qualified purchaser. But one thing to understand is that when I think of accredited investor, I think of getting access to a lot of real estate funds, for example. There are situations where you can invest in real estate funds or syndications without being an accredited investor. My personal opinion is that those are never really good quality investments. If a fund is really a quality sponsor or fund manager, and it's really a good deal, then they're going to limit their investments to accredited investors. So I would never tell someone what to invest in and what not to, but I would be very, cautious about investing in anything that didn't require you to be at least an accredited investor. And another thing you need to understand is that a lot of investments, like some of the best, venture capital, private equity, GP stakes, those types of investments are actually going to require you to be the next level, which is qualified purchaser. So be wary of any investments in real estate that don't require you to be an accredited investor. You, of course, can go out and buy real estate yourself. You can go out and buy homes directly through an LLC or however, you can buy them yourself, and that doesn't matter because you're not investing in a fund. But before you can get access to really good investments in funds, also debt funds, anything where you're pooling investor money into a fund that's going to be managed by a group that will manage the investments or the asset or whatever it is. So those are usually almost always the quality ones are going to at least require you to be an accredited investor. So watch out for that. The last thing I want to mention is that when you are investing in a fund, it's usually a self-certification process. So most funds or syndications that require you to be an accredited investor are just going to require you to check a box that you self-certify that you satisfy this threshold. So there's not usually someone looking behind your back and making sure that you add up and meet these tests, one of these tests. But it's almost always self-certified. I have seen a few funds out there who do require you to get either like a letter from your CPA or an attorney, or they may, you can sometimes use like third-party online companies that'll just, you upload some documents and they'll certify you as being an accredited investor. That's very rare in practice. I don't see that a lot. And I honestly try to avoid those types of funds because it's a pain to me to have to do that. But, just usually you're not going to have to get your CPA or a lawyer to do this for you, but there may be some limited situations where you do. But accredited investor status is almost always self-certification. So you need to look and see, do I personally meet these tests? And then I can, once I satisfy one of these tests, I'm an accredited investor. I can go out and then invest in funds that are limited to accredited investors only. So hopefully you found this video helpful and you understand why it's important to understand who is an accredited investor and what that means and what types of investments you can make. Again, I highly encourage you to check out my investment hurdles video if you haven't already, and the qualified purchaser video so that you can understand what that next threshold is that you should be targeting. So if you found this video helpful, please like the video and subscribe to the channel.